You are listening to chartingwealth.com for Wednesday, the 3rd of August, 2016. Well, we have a down day in the market, a bigger down day than it was on Monday. That is, a bigger down day on Tuesday, the 2nd of August. What do we see going on? Well, we are still officially in an up move. We still don't have a crossover yet going down on the total market as represented by IYY. We look at that chart always first. We have had a breach in our 2-day trend line. We have a red spinning top, means lots of decision. We have lots of up movement and down movement as per our wicks. And we have a red down candle, pretty much a spinning top, which means indecision. We have the Bollinger Band losing energy, and we have the MACD moving toward the signal line. As we have talked about for the last many days, the market started moving sideways. Those of you who listen to our weekly review and forecast, if you've not heard that yet, it's only Tuesday. As we go into Wednesday, listen to that. We've had the market trending sideways since about the 15th of July, and we now have a second down day still. Call the day up as far as the total market goes. It's not yet crossed over going down, so the chart is still technically up. If we look at the 4-hour chart, what do we see? Well, we talked about this. Now, here's where your Bollinger Bands can really help you. When you see the movement of the charts outside the Bollinger Bands, almost always you have a snap that will occur, particularly when the markets have been sliding sideways. That is exactly what we saw happen in the morning and in the afternoon on the 2nd of August. That's when we penetrated the 2-day trend line actually in the morning, followed by even more down movement in the afternoon from one side of the Bollinger Bands to the other in a mere day. So we have continued to see that down movement. The 4-hour chart crossed over going down back on the 19th. We were hoping that was a pullback and would have an entry point. One has not materialized at this point. We've simply seen the market now snap over. Will it continue in this trend? Well, we've not seen that yet. We'll continue to watch, but that is some significant and heavy down movement as far as our Heiken Ashi type of candlesticks go. Now, if we range back to our 2-day chart, we take a look at the S&P 500 as represented by SPY. We see it too has been sliding sideways since about the 15th. Hasn't crossed over yet, but the derivative oscillators losing energy as well as the MACD is moving toward the signal line, a red spinning top candle. The 2-day trend line has been breached, so that is warning sign. Look at the 4-hour chart, looks very similar. Had all that movement outside the Bollinger Bands, where, as we've talked about plenty of times before, there is nothing for a stock to breathe outside the Bollinger Band. Does not stay outside the Bollinger Band forever. Popped back in throughout the course of the day on Tuesday, the 2nd of August. Now, let's take a look at, again, one continued bright spot in the market. Even though the Qs was down 0.76%, we still have continued up movement. We did see a bit of a kink over in the blue MACD line that had been continuing to rocket up. It lost a little bit of energy, still far away from the signal line, and the derivative oscillator did lose energy. We still have a beautiful 2-day trend line. What we saw happen is a lot of the upward movement on the candle has been lost, and we now have a much higher wick with the loss in that price. But we still have confirmed up moves on the QQQ, which of course is the NASDAQ 100. If we look intraday, what do we see on our 4-hour chart? Still above the 2-day trend line, and we had a crossover going down in the morning on the 4-hour chart. So those of you who were in trades, of course, were continuing to watch that movement. You may have cleared yourself out or sold half your position in the morning to make sure that you captured all that you had made over that $2 or $3, almost $4 for some of you as the market continued to move up over the last many days. But again, continue to pay attention. Don't let yourself lose all of your profit in your virtual trade. Continue to watch. This, of course, could be a one-day phenomenon, but we did have a crossover going down on our 4-hour chart and a huge drop in the derivative oscillator. So that does spell some potential problems. But again, the MACD is in the negative, and the Bollinger Bands do have a lot more room for movement as far as the Qs, the NASDAQ 100, goes. All right, so we'll continue to watch and see how this turn, and again, we've been talking about this, as you know, for many days. You've seen in all those postings, has the market topped? Is it going to move over? Remember, this is a summertime trading zone. Not a lot of volume in the market. Those kinds of things can happen in the summer. Watch the charts. Don't be fooled. What is gold doing? Well, on our 2-day chart, gold is trying to cross over going up. Hasn't yet done that. Derivative oscillator still in the negative. With this kind of movement, I'm guessing that our 4-hour chart continues, yes, to look good and continue to move up. We are liking our 4-hour chart again, my friends. If you recall, before we got to December of this last year, we loved to just use the 4-hour chart for gold. It crossed over nicely and continued to give us great moves to make money on with gold. And, well, virtual money, of course. And we had lost that at the beginning of the year. But starting about June, maybe late May, we started seeing the charts work again as gold started to move. And, of course, it is looking nicely, crossed over back on the 27th of July. The high then was 128.12. Gold is all the way up, closed out at the end of the day at 130.36. So again, nice $2 or so on gold just in those last few days. So again, as long as the charts work, we use them. And the 4-hour chart does seem to be working well. Now again, when you have your short chart moving in conjunction with your big chart, it makes you feel even better about things. And the big chart is trying to cross over going up. So continue to watch. There are 3 up 2-day candles on that big chart. So continue to watch, continue to pay attention, continue to study. That's the nice thing about doing these virtual trades. Don't lose sleep if they don't work. This is practice. Once you get really good at this, and you will if you practice, you got to keep practicing. You just have to keep your nose to the grindstone. It will come. And when it does come, it will reward you greatly. Thank you so much for being with us. We always love to hear from you. If you have questions, problems, concerns, let us hear from you. You can always follow us Facebook, Twitter, Instagram, YouTube. You want to do something nice for us? Go to iTunes, subscribe to our podcast, give us a 5-star rating. We so appreciate that. Also on YouTube, we're getting closer and closer to 1,000 subscribers. Be one of those 1,000 subscribers, which means you will be able to get and receive our proprietary broadcast. YouTube requires us to hit 1,000 subscribers before they'll do that for us. With thousands listen every week, but it's that hardcore, and we need your help. So go click the subscribe button at YouTube. Do the same at iTunes. We love to hear your comments. We love to know what you need. Get all of our training at chartingwealth.com. Sign up for the newsletter. Thanks for all you do for us. We'll keep knocking it out for you. Pay attention to these charts. Do those worksheets every day, and you will see results. God bless you. From chartingwealth.com.